Good afternoon. I'm Shannon de Rehove. Welcome to today's webinar hosted on behalf of Sustainability and ESG Africa Conference and Expo. Join our panelists as they unpack the pivotal role that public-private partnerships are playing in advancing sustainable development across Africa. Before we start, please note that the chat and the Q&A are available to you. Please post your questions in the Q&A and your comments in the chat. Both the Q&A and the chat are at the bottom of your screen. Please be aware that we are recording this webinar and we'll send the recording to you when it's available. We're also streaming the webinar live on YouTube and we'll share the link in the chat once it's available. Moderating today's webinar is Wendy Poulton. She's the co-founder and a director of the Sustainability and ESG Africa Conference. She's also the director of Strategic Mindsets, a company specializing in strategy and risk consulting and coaching. Wendy will facilitate the discussion with today's panel, which consists of Dr. Gilbert Ang'ana, the founder and CEO of Accent Leadership Group, as well as the Dean of the School of Leadership at PAC University, Peter Varndell, the CEO of NEPAD Business Foundation, and Dr. Warrick Fuchsloch, Senior Client Engagement Specialist at S&P Global Sustinable1. I'll hand over now to our moderator, Wendy Poulton, to start the discussion. Over to you, Wendy.
Thank you so much, Shannon, and welcome to everybody today. We really wanted to have this conversation given the increasingly pivotal role that public-private partnerships are playing in advancing sustainable development across Africa. I think we've certainly seen them successfully in some parts of the world, help to overcome resource gaps and drive impactful projects in areas like renewable energy, infrastructure, water management, agriculture, etc., and be scalable in a way that aligns with national development goals. But we've also seen them being unsuccessful and not promote risk sharing or build local capacity. So today we really want to unpack what is it that makes a successful public-private partnership. Is it community engagement, social inclusion, making sure we have a balance between economic and social objectives? And I'm really happy with our panel that we've got here today because all of them have got quite deep experience with public-private partnerships and what it means for Africa. So I'm going to start off by just asking, and I think I'll start with Gilbert, to ask him, what is it about public-private partnerships that are so important for Africa? And how do we do what we call bridging ambition and action in public-private partnerships? Gilbert.
Thank you, Wendy, for the nice introduction. And really, this conversation is very timely to, the continent and the ambitions that the continent has, especially looking at the Africa Union Agenda 2063. And if you look historically, the ambitions of African countries, and of course through the African Union, there has been very nice policies that have been put forth in terms of, directing the vision of where the continent needs to go. But of course, individually within the within the different countries, there are what we call the national development goals. So most of the countries actually have on paper the national development goals that highlights their ambition. But I think what has been lacking has been the actual actions towards the realization of the policy visions and of course the national development visions also of different countries. So when you look at bridging ambitions and action, is really to say, look, we have these big ambitions in terms of, and there are clear policies from a vision perspective, but why are we not getting there? But from an African perspective, there are also many other things that curtails that, and one of them is actually the financial gaps. And the discussion around public-private partnership then bridges that actions. Just highlights of some of the things that we are talking about. For example, in renewable energy, Africa hosts almost over 20% of the population, of the world population. But only 2% of the global clean energy is actually generated from Africa. When you look at sustainable infrastructure, we see that there's a gap of almost close to 2 trillion. And this talks about almost 204 billion every year. And this has an impact in terms of reducing the GDP of the African countries by 2% or more every year. When you look at now issues around water management, you find the gaps are actually huge from a governance, lack of integrated water resource management in many countries. So these are real issues. And when you talk about bridging ambitions to action is what we are saying, how do we bridge this to ensure that also Africa is at the forefront? So thank you very much. So that's what I can be able to really share in terms of what does it mean to bridge our ambition into action.
Thank you. Peter, do you want to add on to that?
There you go. That should be working. Yeah, thanks, Wendy, and thank you everybody for inviting me. And Gilbert, well done and setting it up. I think you've outlined some of the issues quite clearly. Maybe just to build onto the bridging story. What do PPPs mean in the space? I think it's fairly well understood. It's an opportunity to bring in private sector expertise and capital just to really close that gap in terms of how we can develop, finance, execute, and operate the infrastructure requirements. So that's really what PPPs have been put in place to do, is to find alternative mechanisms outside of the pure government fiscus to make these projects happen in an efficient manner. So maybe I'll just stop there. We'll go in a lot more depth as we go.
Thank you. Warrick, do you want to add on?
Yeah, absolutely. I think it comes down to also shedding more detail around, NDC goals, SDG goals. It's right to have all the policy in place, but having the specific avenues in a very detailed manner on how even existing private sector projects can be enhanced with partnership to be a lot clearer. A good example is that, companies would be doing a very good due diligence and feasibility study on a project and determining different energy available options and what it does cost to install a renewable energy plant, perhaps on the operation. And whilst in the short term that might cost more and be cost beneficial in 10, 20 years' time, they might not take the option originally because of the added cost at the initial stage of the project. But if it's very clear in policy on how that can be mitigated and a share of that cost risk in the beginning, then we can start to see a lot of already existing projects in the feasibility stage start to perpetuate into a private-public partnership that can, set up straight from the beginning, building a renewable energy plant, for example.
So thanks, Warrick. While I've got you, I'll perhaps just ask a follow-up question there. So what are some of the good examples of mechanisms that public-private partnerships are using to attract private capital, and how communication and transparency in these partnerships can help with that process?
Absolutely. I think the key points there are that transparency and communication. And we can actually take an example from the mining sector here, where I began my professional career, is around that technical due diligence and feasibility. It's common practice in the mining sector to declare resources and reserves in a very large 400-page called a JORC or SAMREC compliant document that goes through all the technical feasibilities prior to the project ever being initiated. So I think that's important, that we begin in these partnerships to have those kind of technical due diligences properly established, to gain that buy-in from all of the stakeholders, to understand why decisions were made the way they are to build the solar plant or to go for green hydrogen as a fuel source in a 5 to 10 year period. That technical reporting, whilst common practice and requires reporting on exchanges for mining, is not always there for other sectors or projects. So it should become a common practice to have that technical founding, similarly to lead and other institutions being able to learn from the type of approach technically that one can take for projects such as renewable energy.
So, Peter, you've done a lot of work in Africa and seen a lot of PPPs. What would be your take on some of these communication and transparency issues, but also mechanisms to attract private capital?
Yeah, so Warwick's 100% right. I would tend to disagree with him to say it's not done already. I think, the practices of project preparation, going through the phases of projects are really well known in the infrastructure space. What are our learnings? The rhetoric has always been, there's not enough money, so that's been proved to be wrong. So it went to is not enough well-prepared projects, which was going to Warwick's point and the bankability. Our view has often been that there aren't strong project sponsors, and the people with the right skills to understand what to do when, a little bit what Warwick was alluding to earlier, and taking a project through its phases from inception, and always being prepared for the next phase, because that's where everything seems to go wrong. You finish a feasibility, then it sits in a and never actually moves forward. So having those strong project sponsors that understand the process and drive the process and really make it happen is for me a clear requirement. From our experience, it gets more complicated because typically we look at cross-border style projects, and you can imagine how a project in one country, one jurisdiction is already complicated. As soon as you go into more than one country, it is multiple times more complicated in order to execute. So what we found is that often, people default to setting up perfect institutional structures before they even start the work. So,
Mm.
so in my opinion, more work should be done up front before you create institutions to house them. Get to check if there actually is a need for an institution. Do the feasibility work, and through that feasibility work, decide what you need and what's fit for purpose to house these types of projects. And that's what we've seen is quite a big barrier to progress. Just getting going. Once the projects start to move through the cycles, they become a bit more obvious about whether they're viable or not. And if they are viable, obviously, then they start to attract finance and partners. So maybe an agreement in a slightly different direction from what Warwick was saying.
No, thanks, Peter. Gilbert, do you have anything to add to this particular question?
Yeah, so maybe just to I agree with what Warwick and Peter mentioned. So maybe one of the things that I feel that is a gap, especially in terms of the whole framework around PPPs, is a very nice framework in terms of the technical working, ways of working. But there's a gap in terms of now the soft elements of ways of working. And that's why you have issues around trust, you have issues around integrity, and the behavior that, the different parties that come on board needs to, what are some of the standard behaviors that needs to be adhered to. So all these aspects around gaps in the soft elements of, the framework around how we operate from a soft engagement perspective is what then brings about now the aspect of communication gaps that then, eventually then you find that there are issues around trust, there are issues around integrity. So I think as moving forward, a number of, especially latest PPPs arrangements have started incorporating the soft framework aspect, so that will help in terms of guiding some ways of work, especially in terms of how we relate from a soft engagement perspective, trust, integrity, frequency of communication, what kind of communication, what kind of behavior do we need to ensure that all the parties and all the relevant participants have within the framework of the partnerships in the period of the project. So those are some of the things that can help in terms of bridging, that kind of communication and trust gap.
Thank you so much for raising that issue around trust, because I think oftentimes these projects are held up because there isn't a good trust relationship between governments and private partners. So, what are some of the effective ways that governments and private partners can build this trust, and then make sure we have a strong enabling environment for this collaborative activity that's going to go forward? Because the soft things you write are oftentimes the things that will sink the project. But how do we get around those things?
Yeah, so that's a big question there, and 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 that's what then creates, you find that there are very nice PPPs projects across Africa. Some of them have actually, fallen into pieces because of that. But I want to talk about it in three areas, especially in terms of building a strong collaborative, culture and governance structures that will help in terms of building the trust. And the first one is around authenticity in terms of how the relationship will be. So if you have parties and they from the start, then there is no authenticity in terms of the level of involvement of each partner, and the contribution and the risk elements and how they will be mitigated from the start. Then already we are starting a partnership with a gap in terms of authenticity. The other bit I talked about is around behavior and the behavior of all the parties that are involved. And here I talk about is what we talked about in terms of open communication. So when there are issues to be addressed, then it's important to ensure that all parties are clear around the issues, and then they have a concerted way in terms of highlighting what is the way forward in tackling those emerging issues that they come in. But also the critical aspect around behavior is then how all the parties empower each other in terms of decision making, and also in terms of really, skills transfer, the transfer of skills, because if you have issues around the local players feeling as if they're not involved, they're not benefiting from the whole arrangement of the project within the specific area, then already there is some gaps around trust that will start to develop. So there's an issue around the behavior of empowerment that needs to be clear. But also, most importantly, is inclusivity. If you're not clear in terms of the gaps around inclusion of all the key players, including the marginalized groups, then from the start you find that there's an issue around trust that will start to build in. So this then forms part of what I call the collaborative framework, or a governance framework that will help to really strengthen the operational guidelines of how we engage. It strengthens the overall structure of behavior, of relationship, that then builds into driving the aspect of clear understanding, or what we call mutual understanding, mutual trust, and mutual respect within the partnership. So it's a difficult task to build that framework, because everyone needs to be clear in terms of what is happening and the level of involvement, and of course to be cognizant around all the other marginalized group. But if we're able to build a framework around authentic relationships, the behavior that we need to be able to uphold, all of us, within the guidelines, and the governance structures for the PPPs, then that can help in terms of mitigating some of those trust and integrity issues.
Thank you so much. And I guess happens over time as well, right? It's got to be built. It's not something that's going to happen overnight. Peter or Warrick,
Yes.
do you want to comment a little bit about that and the importance of these trust relationships?
Yeah, absolutely. And I think Gilbert outlined of how important this framework setting at the start of the project is super important. But I want to expand on two key words here, is frequency, and as you just mentioned, time, that how the project perpetuates. And coming from S&P as a data provider, we're often asked by the financial community, please help us determine what is monitored. What does positive impact really mean, and how can it be monitored over time? So firstly, setting those KPIs in that framework, but then also having that frequency of updates to see how many emissions did we abate, how many people did we empower, those success metrics ongoing, publicly reported, that will facilitate that trust and establish that ongoing partnership. And it's something that even in the private sector, with green bonds and different types of financing, we don't often see, is that frequency of monitoring of KPIs that are positive impact metrics, which us as that data provider are often asked for. They're difficult to quantify.
Peter, anything from your side?
Yeah, I mean, I agree. Frequency, timing, all important. Particularly with PPPs, early stage engagement is critical. Because these are things that need to be shaped by professional people and tested with the market. So the earlier that engagement can take place, the more opportunity you have to shape it and make it into a transaction that's successful. And this is well known. There's lots of examples of it in the infrastructure procurement space where that really has benefited. So when something comes to market, it can be executed on. But on top of that, I really love the word that Gilbert used, authenticity, because I don't think you realize how important that actually is. Partners want to see that there's a genuine project and there's a genuine opportunity and a genuine ambition and a genuine chance of it being successful. And unless you see that, you're just not going to get people to participate and first of all help you to shape it, and secondly, and actually deal in the project when it comes to market. So
Yeah.
I think that authenticity word is quite a deep word that you can really start to unpack. In what's the mood music around a project really that people are seeing.
No, thank you. Couldn't agree more. So we have a excuse me, a question from Michelle Riverola in the Q&A asking about how you deal with the contingent liabilities of PPPs and how it affects the debt to GDP ratio of a country and its ability to borrow money. So she's saying unless and until PPPs are shown as unit liabilities on countries' balance sheets, there's a distinct limit on how much can be unleashed on the PPP market. Any comments on that question? Are we
Yeah.
being constrained by this? And
I
what
love it,
could
Graham. I think we all said that we're not finance experts, so let's just take it from that point of departure. It's fact. I mean, it's absolute fact, and you see it already in the renewable energy market, where you've gone from a situation where projects are sitting fully guaranteed by government to the case now where they're not, and it changes the risk profile of the projects, and ultimately means that a lot of projects don't happen. So how you solve that, I'm certainly not the person to tell you how, but it's a fact of the matter. And you've just got to figure out a risk mitigation measure that deals with it. And I'll give a soft example in the water space. We know there's challenges in the municipal water environment. The easiest way to deal with that is to give a potential water service provider a line of sight of revenues. It's not something that the governments want to do, so that means that you then need some other risk control mechanism to be able to deal with that. So it comes down to structuring, I guess, at the end of the day, and these are facts. Countries don't have the ability to put huge amounts of liability on their balance sheets.
we have another question which is on our
Yeah,
list as well.
maybe Wendy,
Yes,
just to add on that,
sure.
yeah, and just looking at some of the projects that I see that were more high risk and how they were done. One of the projects that is top of mind is the one in Azura, Edo, which is in Nigeria, the 459 megawatts, which is a partnership between the World Bank plus MIGA. And how I saw from a financial model, you find that World Bank and media covered the payment and the aspect of payment and political risk around it. So which was coming almost close to 900 million US dollars. But then now other groups, other investors also mobilized some amounts to cover for some of those risks that are maybe upcoming and so on. If you look at also the project around Uganda, which is more also an infrastructure project that is called the Bujagali Hydropower in Uganda, 250 megawatts. I see also some kind of, refinancing, which then uses a little bit of a combined model of financial model. And here I look at, for example, blended development financing where you have partial risk guarantees, you have inclusion of political risk insurance, and of course, liquidity backstops. Those are some of the things that I see a lot, especially if you look at the financial models of PPPs recently to mitigate some of the issues that the person has actually raised from a risk perspective.
Thanks, Gilbert. We've got another question in the box, which is one we were going to ask as well, which is around when should we do PPPs and when should we just have it as a government infrastructure development program that is funded and financed by the government itself? How do we decide when it's a good idea to do PPPs? And what are some things that have gone right and wrong in this space? If anyone's got any examples. Warrick, shall I start with you?
Yeah, sure. I think when projects face a lot of risk and risk can be shared equally in such a partnership, it makes a lot of sense to be able to achieve that. Some projects as well might not be able to be fully funded by the government and require that external investment. So then again, it's important to have those blended finance, pay for success, green bonds types structures in which both parties can have very clear benefits from the beginning and as well as mitigating and spreading that risk profile. So in a lot of instances, and I alluded to this at the beginning as well, projects might have a stopgap where they have to choose perhaps a fossil fuel energy source at the beginning, but a partnership can, enhance the ability to have a renewable energy source and project within itself, based on a partnership being established that is very clear.
Okay, so supplementing already existing government initiatives with partnerships to add on or scale up some of those. Thank you. Anyone else want to comment on that about when we should and when we shouldn't do PPPs?
Yeah, I mean, I think there needs to be a clear need and additionality. I think it's, that can talk to capacity, expertise, but fundamentally it's typically around finance, right? So, we've been involved in a number of programs over the years trying to accelerate PPPs, and ultimately what it all comes down to is their revenue stream. And that for us has always been the key differentiator. And can that revenue stream in its structure be affordable to private finance and get the returns? And so that's always been the big differentiator from our point of view. It needs to pay for itself.
Yeah, so maybe Wendy, to add on that is, in many African countries, you will find that long-term national goals are more political. So there is a political cycle in most cases every 4 years, every 5 years. So because of the nature of politics and the political cycles in Africa, and because they're also the ones that are driving the national goals, so each political player would want to come in and they have a big ambition to ensure that within the period of their political cycle, then they're able to showcase that this is what they have done. But in reality, is some of those projects are more politically instigated projects and they're not backed by possible, long-term financial model that really helps to sustain it. And that's why you see a number of African countries have ended up having, partnerships that then some of their national securities or sovereign securities almost being, taken over as a result of that lack of futuristic financial model. There was no business case in terms of that project, but there was a political motive around it. And I think that's the question that maybe is being triggered there in terms of, okay, when we look at the countries in Africa, we see a lot of push every political cycle. And politicians would want to really ensure that they have partnerships that are more PPPs related, but they are not business case backed. After 5 years or after 10 years, and they end up leaving the next group of politicians in the next cycle with a burden that they cannot be able to manage. So then they end up now accumulating the burden over the years because all these projects were not necessarily fully backed by a sound business case.
So that's a really good point, and it's one of the other questions we had about some of the conflicting objectives that we may have between the public and the private sector, where the public sector may be really wanting to push social benefits as a result of PPPs and possibly more broader economic benefits, whereas the private side of the investment is more focused on getting a return and the efficiencies and the way in which they're running their projects. How do we bridge between those two quite conflicting objectives? And are there ways in which we can get the best of both worlds? Peter, can I start with you on this one?
Yeah, I think Warwick actually covered this quite well earlier. It's about communications up front and doing the early work. So long as everybody's clear about what everybody's trying to achieve, and you do that from the outset and your conceptualization, your pre-feasibility work, you can start to align stakeholders in terms of what they can achieve, and then you can get more than just the one outcome. So I think you need to acknowledge that investors are looking for commercial returns. It's fact. You need to acknowledge it, but build into that the way that you can achieve the outcomes for the more social outputs. But you've got to do that from the beginning. You really have to start early on that, so you are aware as you go down that cycle, to Warwick's point, when you take decisions, why you've taken them and what the consequent results are.
Mm. Thank you. Anyone want to add on that point?
Yeah, and I think naturally in these partnerships you're bringing different things to the table as well, which actually make for a very enhanced and project. The government is bringing stability and regulations and policy, and will have its own agendas in terms of social enhancement and uplifting communities. The private sector is bringing capacity and technical experience as well as funding. So it's not a problem necessarily that the two don't have the exact same priorities, because aligning them is beneficial to both parties. So just about establishing those clear outcomes based in the beginning, as Gilbert was also saying, in this very clear framework, is very important in what can achieve, on paper, such a good outcome by combining those different priorities and skill sets from each party.
And we've got a question online as well about how can leaders, or what are the leadership behaviors? You spoke about it, Gilbert, about behaviors, but what are those leadership behaviors that are going to help build trust so that you can have this open and honest communication up front and have an authentic engagement? Gilbert?
Okay, great. So that's a very good question. First, I want to add into the initial question where you talked about, and I just want to add one point in terms of the need for the private sector to come out strongly, especially in driving two areas. In terms of bringing character, and this is more from a credibility in character, operationalizing and governance of the whole PPPs framework, but also most important is the competence. But tying it now to this question of what are these behavior? Because this behavior talks about the character of the parties within the PPPs. And more specifically for me is how the private sector injects a bit of character in the management and governance of the whole PPPs. And here I talk about the aspect of open communication that we've talked about, and this is where, if issues are to be addressed, then there has to be a proper constitution of all parties that are involved, and all issues relating to whatever the engagement that forms part of the partnership needs to be addressed and be a representative of all the key players within the partnership, including the end users, who are possibly the local communities and so on. But the second one is around inclusivity, and inclusivity here is also looking at some of the marginalized discussions. There are discussions that could be, for example, political in nature within a specific country. Like a good example in our country, there's been a lot of engagements around PPPs, and one of them has been in the partnership around the agricultural partnership in the sugar sector area, where the government is trying to bring in partners to enhance the sugar factories within Kenya. But the local players, who are the immediate local communities and so on, and the politicians at local levels and the leaders are not involved. So it's a government strategic initiative, but the buying is not really received from the local stakeholders. So this has actually brought in a lot of issues around the operational ability of such kind of a good partnership that can really help in terms of scaling up some of these industry and create more employment. But because it's not inclusive in terms of the discussions from the start, then there is really limited buy-in that all the players really have. And the other one is on empowerment. And we've seen a number of projects that have come into different countries in Africa, and they have been done, and somehow finished based on the on paper in terms of the design of the project, but have never had any impact in actually the actualization of the output that it was intended to do. And this is because of lack of empowerment in terms of what sustainability of those projects post implementation. And I think many examples I can give that touches on that, where projects have been done. There was no really involvement in terms of transferability of skills, knowledge, and really sustainability of the projects. And the projects have actually, been stagnated, and the millions of US dollars have been used in terms of that. So the aspect of empowerment is critical. Transferability of skills, capabilities to ensure sustainability of the projects is important.
Mm. No, I couldn't agree more. I mean, I think otherwise you're always going to have to be dependent on each other, and you want to be able to run that project adequately once the partnership is finished, or be able to scale it up in different ways. But I want to just talk about the types of PPPs that we're seeing in Africa. So we know that there are a lot around infrastructure and that kind of thing, but we've had a question in the chat about looking at projects, for example, on education. Looking at other types of services that we could be potentially doing. How much do we talk about, and they're enablers for many other projects in infrastructure and manufacturing localization, is education. Do you guys know of any project that's happened in education that's a PPP that is a good example of how we could do this, or in other service industries and not just infrastructure? Warrick, can I start with you?
So borrowing specific examples, I think it's a R&D technical distribution of knowledge is extremely important. And I think this is where we should absolutely focus on in terms of projects. There are so many different technologies that exist in laboratories at the moment that need to be proven at scale. Things like green hydrogen and various technologies that could significantly change the landscape later on. And whilst I haven't seen too many examples, I have seen some examples in the mining sector around rare earth elements and the recycling of such, and partners where universities have partnered with governments as well as the private sector in terms of mining companies looking to mine new renewable energy, new rare earth element sources. So I think that's something we should definitely synthesize and use as an example and help scale.
Peter?
Yeah, look, I mean, my background is more in the infrastructure space, so I'm familiar that there are other examples, but probably not best for me to comment on those. Maybe where I would go is, in the infrastructure space. I think what we've seen is that PPPs are not necessarily always the traditional ones that you see, where there's an investor looking to buy into a project. There's also user centric PPPs. Example in South Africa, very many in the water sector, where for example, mining companies invest alongside the government departments in the infrastructure required to service their mines. So that's not a typical model where you're looking for an external investor to get a return. It's a company that's investing into their own assets by co-sharing some of the development costs. So those are really good examples that are I guess less conventional. It's been done in the wastewater space. It's been done in the water supply space. And then we're also seeing at a smaller scale, this is the emergence of the credit type space. So, carbon credits, water credits are now becoming a thing, water replenishment targets. These are other ways where private companies can contribute towards building infrastructure that has a common interest and a common purpose. They're just looking for an ROI on that project. They're looking for water neutrality, energy neutrality, not necessarily a commercial return.
Thank you. Gilbert, anything from you on this one?
Yeah. So maybe I can highlight just a few projects that I feel that maybe they touch on various things. So one is is a project in Kigali in Rwanda, that is Kigali Bulk Water PPP. I think it was led by Metito, a consortium of partners. And the idea here was to deliver almost 40,000 cubic meters of, irrigation water, which is one of the first, sub-Saharan Africa first bulk water PPPs outside of South Africa. And this has actually taken well in Kigali, and it's supports, irrigation, from an agricultural perspective, and of course all the aspect around water management ecosystem. There is also one in Morocco that is called Agadir. I think Agadir Chotwaka, which is also was operationalized in 2022, and more from a water management perspective, and it's almost supplying 400,000 cubic meters of water per day, in terms of helping in agricultural development. Here in Kenya, we have one that has been long standing, that is called Galana Kulalu food project. So that touches on water management and then also aspect around agriculture and food sustainability. We have one in Nigeria that is called Nigeria Special Agro-Industrial Processing Zones, that mobile that drives the aspect of sustainable agriculture within the country. So there are very various projects that touches off the main infrastructure aspect. And also there are many other from an educational perspective, and now from a climate sustainability, where we've seen now climate adaptation projects that are more locally driven, that are also partner driven, that are both PPPs in a small scale, that are coming up in many African countries, especially with the discussions now on climate sustainability in various aspects globally.
Thanks so much. So we have a question from Landiwe asking about how we allocate risk in these public-private partnerships. Which of them are the most difficult to allocate and mitigate? Warrick, do you want to take that one?
That's a very difficult question, and I think it becomes about what risks we are we are sharing. Like financial risks could potentially be more within the financial sector space, within the public companies, but the risk of actually maintaining policy and keeping within regulations and perhaps credits that the partnership receives as a result, that would be more reliant on the governmental institutions. So the risk that needs to be shared, it's the type of risks that both entities need to maintain. Where is their expertise? And it's those type of guarantees that can mitigate those overall risk of the project failure.
Anyone else want to add on to that?
Go ahead, Peter.
Yeah, like I said, it's difficult to give a one size fits all answer to that. I mean, it's very different in different sectors and in different jurisdictions. But I think ultimately it comes down to where we started the discussion, is the need to early identification of these things, the risks, and allocating them appropriately to the extent that they can be allocated. Sometimes you cannot.
Gilbert, do you want to add?
Yeah. I think I mentioned earlier also what I have seen, especially in some of the partner financial institutions, on how they are somehow trying to model the financial risk to ensure that some of the business cases are sustainable. I see a lot of now financial institutions coming up with what we call partial risk guarantees. And they also use liquidity backstops to try and mitigate the aspect of policy. I mean the political risks, and many other risks that can crop up. I also see from an implementation perspective and sustainability, there is the aspect of price tariffs and tolls for long-term bankability of the projects that are being introduced in many other spaces. Like in Kenya here, There's a PPP project that is called the Nairobi Expressway that was, an infrastructure project that connects different outlets within the CBD that has helped in decongesting traffic. That started from minimal toll fees that are being charged for purposes of sustainability and long-term viability of the project. So those are some of the ways on how some risk can be mitigated.
Thanks. So I wanted to turn now to talk about the skills that we need to make public-private partnerships successful. Do you think we spend enough time on those? What are the kinds of skills that we need to develop, like negotiation skills, like risk allocation skills, being able to source financing? Are those all coming from the private side or the public side? Are there new skills that we need to be able to do this more effectively? Peter, do you want to start with that?
Well, I think it's almost like an intuitive answer. I think there'd be more of these in the market if there were sufficient skills and capacity available. It's probably not just a straight skills debate. It's a capacity debate. And for me, I mentioned right at the beginning the need for strong project sponsors that understand it in the first instance. That for me is a gap. From a leadership point of view. But as you run through it, there need to be teams of people available to be able to support these transactions. So I know locally in South Africa, we've tried to deal that by having specialist units within the PPP, within the Treasury units, GTAC and these types of organizations that can provide that specific expertise. Because not every municipality, not every ministry, not every SOE is going to need all of those expertise at all times. So, I think it's one thing having those transaction advisory skills available in the private sector. You do need it within the client body, within the sponsors to be able to meaningfully guide the transaction advisors and give good feedback and to properly shape a transaction. So I think intuitively it just says to me that there are capacity gaps and skills gaps to doing more of these transactions.
Gilbert?
Yeah. So maybe just to add on it, and I'm looking at it from a leadership and governance perspective. A lot of issues, especially around PPPs, has been as a result of poor negotiations, and there's need for what I call responsible negotiation skills to be impacted, especially across the partners within such arrangements. Where they understand. I mean, sometimes things will change the thoughts, ideas that were there from a vision perspective. When it comes to implementation, things might really deviate from the actual plan. But how then do we negotiate responsibly all together to ensure that we don't lose the bigger focus of the project? Even if we divert, then we divert with the focus on the expected outcome and impact of the project needs to be in mind, so that then we're able to navigate the negotiations soundly. But more importantly, which we have shared here that touches on all aspects of communication, is the aspect of collaborative leadership skills. And I think this is one of the missing big piece this is a collaborative project, but we lack the collaborative leadership skills to navigate it to success. And that's why you find, if you compare the rate of successful PPPs in Africa versus the rate of unsuccessful PPPs, you find a lot of unsuccessful PPPs as a result of that gap in collaborative leadership skills. And this is where, for me, I say there is need for a very strong and responsible private sector to inject such, credible character within the PPPs arrangement. There's a lot of positivity in the private sector, but of course, because of political alignment and sometimes they are afraid of being victimized in one way or another, then they actually compromise the whole character of the project, and they they jump into the character of the public sector, which in most cases we know in many countries it's questionable. So there is really need for a very strong and responsible private sector to ooze in the credibility character in the PPPs project.
Thank you so much for raising that issue around the collaboration, because it's oftentimes that people don't want to necessarily give up power and collaborate really effectively. And so I think that can be a big barrier. Warrick, anything from your side around skills?
Yeah, I would agree that collaboration is key. All of these skill sets required to navigate the opaqueness of, these partnerships aren't within one faculty. As sustainability professionals, you often have to be an expert in so many different aspects. So if you can bring people together that have the right sets that can navigate this, and again, that attests to the sound leadership to be able to put those people together in collaboration is absolutely key.
Thank you, Warwick. On the chat, we're getting some input as well of people saying the ability to foster innovation and commitment and accountability, the skills around what was the other one I saw here? Sorry, let me just find it. Project management, implementation skills, and also the technical skills sometimes to understand the technology and what it's going to mean in terms of implementation. So interesting input there. Okay, so we're coming sort of to the end of our discussion, and I'd like to just focus on the last topic, which is about scaling up. And I want to ask each of the panel members to, if you had to highlight one critical ingredient for scaling up so that we get from these isolated examples of where PPPs are working to a really continent-wide use of PPPs to help drive economic growth and social upliftment, what would that critical ingredient be? So, Peter, I'll start with you.
Yeah, just having looked at long lists of potential PPPs that people have been trying to develop, better early stage project selection of projects that have real genuine potential of being PPPs, I think is a critical factor. Not just assuming that you can get involved and one will just suddenly appear. So project selection for me is fundamental. And on the basis that it will be well prepared, I think we've discussed that anyway, with the right expertise, the right engagement, early stage engagement. And then just coming back to what I said, with a strong project sponsor that really fully understands the project, the cycle, the decisions that you're taking as that project develops, I think for me would be critical in this space.
Thank you. Gilbert.
Yeah, so for me, and especially looking at it, if I look at the importance of the strong and responsible private sector, then the most critical that I feel is the bankability of the projects, especially when it comes to risk sharing. Because if we start on the wrong foot, if the private sector is not responsible enough to help in terms of building up a credible business case, then will not be able to mitigate the risks that comes with PPP. So the bankability of the projects through risk sharing is critical. And good example is I say again the Azure Edo project in Nigeria. If the World Bank did not come in and come in with guarantees and of course the mega insurance, that project most likely would have actually gone down. And it mobilized almost a 900 million, over 900 million US dollars from a private capital perspective. So this was because of the sound business case that, the project from the start, the credibility of the private sector in building up the sound business case and looking at all the risk sharing areas. And this is where we see a gap. Initially, as when we started, I mentioned some statistics that from an African perspective, we only attract 2% of the global clean energy finance, and this is largely due to the perceived risks that are in Africa. So if we're able to build a sound and credible business case, then a number of our projects would actually take off and mobilize capital to drive focused development that have impact on the community at large.
Thank you. Warrick.
Great. I think Peter and Gilbert already gave us the salt and pepper. Absolutely agree with those ingredients. So perhaps more of an ethos. We mentioned earlier and we asked the question, what are some examples of, in education, some partnerships? And I was struggling to bring some to mind. And only afterwards I started to remember the ones while I was in university that were exceptionally successful. The example being the partnership between the NRF and a very major mining company and the university I was at to understand the length of the copper belt in Central Africa, because we need copper for the transition, which is a great project. So the ethos I would impart is to be able to start championing success more where these projects have had success, because, I couldn't draw upon them immediately myself. With that champion of success, it also gives credibility to those organizations that have achieved that. So it has a historical precedence when these organizations want to continue and develop new partnerships in future. So that would be my last ingredient to the pile.
Thank you. I think that's a great one. And I think it just shows that these partnerships are also very contextual, right? Depending on where you're developing them. And so we have to really look at that context, what's needed. I've heard a lot of you talk about leadership initiatives. What do we need from individuals within that space to make this work? And that we need to collaborate and co-create some of these things. And if we don't get those things right, we are never going to have the social upliftment and economic development that we need from public-private partnerships. So I think that brings us to the end of our discussion, and I just want to thank Gilbert, Peter, and Warrick so much. I think you've really given us such wonderful input into this discussion, which is so important for sustainability and sustainable development in Africa. So thank you so much. And with that, I will hand back to Shannon.
Thanks, Wendy. And thank you all very much for joining us today. Before we wrap up, I'd like to extend my gratitude to our moderator, Wendy Poulton, and our guest speakers, Dr. Gilbert Ang'ana, Peter Varndell, and Dr. Warrick Fuchsloch, for an informative webinar. On your screen now is a poll about the Sustainability and ESG Africa Conference and Expo, which takes place on the 15th and 16th of October 2025 at the Sandton Convention Center. This highly anticipated This highly anticipated event provides an unparalleled platform for industry pioneers and experts to come together and tackle the common challenges associated with embedding sustainability and ESG practices within organizations. Don't miss out on this unique opportunity to be part of the change makers shaping Africa's sustainable future. You can visit the website at esgafricaconference.com to book your seat or to learn more. You will also see a QR code on your screens, as well as available for download in the chat, for a 15% discount on your registration. So be sure to take advantage of that. And if you have any further questions or would like to continue the conversation, feel free to reach out to us via email at shannon@creamermedia.co.za. And with that, I'd like to bid you farewell. Thank you very much for your time, and goodbye.
Thanks, everyone. Bye.
Bye, everybody.